I've traveled from the planet Uranus to understand Earth's political systems. In a previous video, we learned that the Federal Reserve creates money, but I've recently learned that private banks can also create money. I find this confusing. Can you explain? Alright, so let's start at the beginning. So there's two types of monetary systems, asset-based and debt-based. An example of an asset-based monetary system is cigarettes in jail. In prison, they price everything in cigarettes. Go figure, the thugs in Rikers Island have a more honest system than Wall Street. Now the second type of monetary system is debt-based, which is like the one that we have. What a surprise. So if you have $1 and you go deposit that in the bank, they lend out 90 cents, but you still have that $1 deposit. So in this sense, they create money. Then the guy that they lent that 90 cents to, he deposits that money in a different bank, and they lend that out, let's say 80 cents. So in this sense, the money keeps snowballing until they've created 10 times the original government money. Yeah, this couldn't possibly be a pyramid scheme. They only print a pyramid on the money itself. If money is debt, then financial assets like stocks or real estate are inherently a bubble because the money supply itself shrinks unless people take on more debt. My home is worth millions, all of it borrowed from others. Who borrowed it from others? What could possibly go wrong? Bitcoin was created to avoid this debt-based bubble system, which is ironic because it's become a bubble itself. Buying a bubble avoidance currency. I'll pay even more for the bubble avoidance currency. I'm rich. Now I'm selling. I want to sell the bubble avoidance currency. To understand how this all works, we need to review some of the information we already covered in our episode on the Federal Reserve. Now, if you haven't seen it yet, you can click the link in the description. But as a general review, let's recap. The Treasury sells Treasury bonds to primary dealer banks, who then sell it either wholesale to the general public or direct to the Federal Reserve. And I just can't figure out why the government is in debt. They make money selling commissions from debt, and we're in debt. I can't figure it out. But here's the crazy part. That money that's on the primary dealer bank's books before they lend it out is a separate type of money called Fed funds that only banks have access to. How's that work? Okay, so to understand this, think of two people with the same bank. Let's say Wells Fargo, right? So I pay you, and me and you both have Wells Fargo. So the money never leaves the bank. It just changes whose account it's under at the bank. You're using Wells Fargo as an example for locating customer accounts? They have more fake accounts than Vladimir Putin's Instagram page. So now let's apply this same concept, but instead of customer to customer, it's bank to bank. As banks keep an account with the Fed just transfers the assets as though it were from customer to customer at a commercial branch. In this sense, the Fed is like the banker's banker. Overdraft fees? On top of the bribes I already have to pay Washington? Damn banker's bank. But here's the crazy part. That money that's kept at the Fed is a separate type of money that we don't have access to. Totally different from commercial deposits that me and you use as everyday money. Inequality in America? No. We make about the same. I just keep my money in a different currency. Huh? So how does Fed funds become the money that humans use? Why, the banks lend it to us. I think we should update the Constitution. All men are created equal, but some pay 3% to primary dealers. Okay, so I think I understand. So there's two types of money: government-created money and private bank deposits. Surely it can't be more corrupt than that. It is more corrupt than that. There's a third type of money called Eurodollars, and the point of that is to avoid FDIC insurance. You're jumping to explain Eurodollars when the alien doesn't even know what FDIC insurance is. I want to hear from the perspective of someone who actually works in the industry. Please welcome for the rest of the episode our special guest, Citigroup banker. Yeah, suck it, you third world child. Oh, I didn't know we were filming. What is FDIC? The FDIC is the government. It stands for Federal Deposit Insurance Corporation. Basically, it's insurance for depositors. Should there be some issue with the bank, they will always get their money. Why is it called a corporation if it's the government? You see, the alien does understand the FDIC. It's a corporation because it just benefits the banks. No, it's a corporation because it's funded by private commercial banks and not the taxpayer, which would be unfair. Except when there's a bailout, like the 1930s, the 1980s, and 2008. Actually, every time there's a problem, there's a taxpayer bailout. Those weren't direct FDIC bailouts. They were Federal Reserve liquidity injections. Liquidity injections? Oh, okay, then waterboarding isn't torture interrogation, it's aquatic charades. And I think the problem is that banks are allowed to take on too much risk for the FDIC to handle. I'm doing Evel Knievel stunts. Approved. I'm lighting my balls on fire as I dangle from the chandelier to fart signals to my loan approval officers. That's approved too. I'd like to open a Bitcoin ETF. Whoa. Now that's just too risky. Well, I think the problem is there is no Goldilocks risk amount that's not too hot and it's not too cold that the government can magically know what the correct amount of risk for banks to take is. If they could, why wouldn't they work in the actual investment business? I am an all-wise government forecaster, for I can predict the exact level of risk for the economy as a whole. You should work for a hedge fund. The government is bankrupt. We could not predict the lack of tax revenue. Okay, now I understand what FDIC insurance is. You mentioned Eurodollars help avoid this. What is a Eurodollar? So if you thought Fed funds was crazy, Eurodollars is just insane. So earlier we explained how the Federal Reserve creates $1 and then that's multiplied by fractional reserve banking into $10 of commercial deposits. But that's just onshore. Then offshore, they take each one of those dollars and fractionally reserve multiply it by 10 more into an insane amount of offshore Eurodollars. It's like a dream within a dream. It's the inception of currency. This is so confusing. Yeah, no wonder bankers get away with it. How could you bring this up during a debate? Welcome back to the presidential debates. Yay! Contestant number 1. What problems would you address? The real problem is that for each dollar that the government creates through Fed funds, banks multiply this by 10. The money supply then is even further multiplied an infinite amount of times offshore, where it escapes reserve requirements through a system called Eurodollars. I want to fix this and reform the Federal Reserve. Interesting. Contestant number 2. What is your response? My opponent had a sex scandal. Boo! Candidate 1 I'm voting sucks. For candidate 2. Boo! That guy is brilliant. Let's hear it for 2. Let's pause the episode here. In part 2, we'll learn how the offshore market affects the onshore market and debate what to do about it. This episode will be available next Saturday afternoon, and if you're watching this much later, the link is available right now in the description. What these bankers do is a crime. You deserve to go to jail. I can't go to prison. They only accept cigarettes as money. Actually, I'll create my own type of money. Call it Fed tobacco. Oh my God.